KPIT, that's been quite the dhamaka earnings. Let me welcome on board Sachin Tikekar, the President and Joint MD at KPIT Tech, joining in on the show right now. Sachin, hi, good morning. Good to have you on the show. A significant upgrade to your guidance. What's changed so much in the last 3 months?
First of all, thanks for having me and good morning to you. Things have been building up, to be honest with you, over the last 3 years. Nothing significant has changed over the last 3 months. It's just the consistency that we have built over the last 3 years that's giving us the confidence. And also what we have done in H1 of this year, Q1 and Q2, gives us the confidence that looking forward, it's time to revise the margin. The overall, just to double click on that, the overall growth is fairly balanced across all our practices and across the geos. It's coming largely from our T25 clients, and we continue to go deeper and wider with them. So that gives us the confidence to have a upward revision of the guidance.
You anticipating higher client spends because your margin guidance is still around 20%. So somewhere you must be also anticipating cost headwinds or investments perhaps?
Not so much of, so let me talk about what our clients are thinking at this point in time. Obviously, if you take the two aspects that are weighing sort of on the minds of our clients. One is the whole macroeconomic scenario, which remains dynamic across the globe. And secondly, the geopolitical situation. We have had one war for 2 years, and now there is another war. That is so there is a little bit of nervousness in the minds of the consumers and the OEMs. Having said that, most of the programs that we are working on for our OEM clients are long-term programs. They are for their model year 25, 27. Some of them are beyond 25, 27. These are important to them. And so that business continues to go very well. In that business, we don't see any headwinds in terms of pressure on the cost on us at this point in time. To your point, even though we have increase our guidance on the top line significantly, there is also increase on the EBITDA. However, looking at the kind of work that we are doing and that we need to continue to do in future, we'll have to make significant investments proactively to look at the trends that are upcoming that will solve some of the problems of our clients. So we'll continue to invest significantly in terms of building our practices and building our presence across the globe.
All right, morning. And I also wanted to understand, Sachin, what the outlook is when bulk of your revenue comes from PE. You had said that you'll be sharpening your focus further on commercial vehicles. What is the outlook for the near term?
No, it's a great question. Passenger car, more than 70% of our revenues comes from passenger cars, and we believe that that will continue to grow for the midterm, for sure. Having said that, more than 28% of our business comes from commercial vehicles, primarily from trucks. And we need to go deeper with the trucks. There are a handful of clients that we work with. I think there is an opportunity where we believe that we can create value for some other clients within the truck business. That's point number one. Point number two, over the years, we have taken somewhat of a, for lack of better words, a tactical approach towards off-highway segment of commercial vehicles. It's time to go deep, understand their business problems, look at their technology challenges, and sort of tweak our technology offerings to solve their problems. So that's going to be an area of focus for us, and we believe that that will also sort of complement our growth in the next 2 to 4 year horizon.
You earlier talked about that your deal momentum or hinted towards deal momentum being strong because $156 million worth of engagements were already closed in this quarter. Tell me what's the funnel or the pipeline of deal wins looking like, because there were a couple of large deals that you had hinted about, right?
The pipeline continues to be robust, in all fairness. The pipeline, depending on the kind of engagements that we close in a particular quarter, it goes up and down a little bit. If you look at the trend over the last 6 to 8 quarters, has been consistently going up. And some of the large engagements that we are able to announce together with our clients, some of them we don't announce. And some of them are not even structured as large engagements to begin with. But when we start to engage with our clients, they just grow substantially. And there are about 3 clients where those engagements have grown substantially without making it a really large. It didn't start off as a really large engagement. There was a roadmap. However, that visibility became more obvious to us over a period of time. And we believe that that's going to be the name of the game going forward. We'll do more of that with some of the OEMs that we are working with. Net, the pipeline continues to look fairly robust.
92 points higher for the small cap index. I'm just reading the screen here right now, coming back to KPIT, because the markets right now are seeing a lot of green, which sustains also, I think, is great news. The big picture for IT is that decision making is getting delayed. The order pipeline for the large companies is also solid. It is just that the translation, which could take months, has taken quarters now. So when you say the order pipeline is looking decent, is that just the visibility or the conversion is also looking decent?
Unlike IT, where I think decisions are getting delayed, the discretionary spend is getting pushed out a little bit given the uncertainties. The OEMs that we are working with on the engineering side, especially in the mobility segment, we have not. The conversion also is reasonably good, and it's not just the pipeline. The conversion is also, we have not seen any kind of reduction in conversion so far. And we believe that it will continue. Obviously, given all the reasons that I talked about earlier on, we have to be watchful, and we are being very watchful. But right now, the conversion is on track as well.
Now, what about your headcount total at about 11,971? It has grown sequentially. Will the steady pace of headcount addition continue?
Yes, as we announced at the beginning of the year, we continue to do our campus recruitment. It's going as per the plan. And in H1, it's actually gone as per the plan. And we are very happy with the recruitment season that we've had on campuses. And in H2, it will go as per the plan. So there are no changes from our side. Every quarter, we'll continue to add people from campuses. That's part one. And part two, as we grow across the globe in our different centers, we also need to hire people with experience. That also is going as per our plans. So we are actually sticking to the plans that we made at the beginning of the year, and we don't see any change during the H2.
The industry has seen a huge first uptick in attrition, now the reverse, which is that there are no jobs, campus hirings are not getting honored. Talent is talent, right? And when talent is scarce, wage goes higher. And when talent is abundant, wages go lower. Could that be a permanent change in terms of the way you would be considering your wage hikes now?
You described it. I think that there are ups and downs, and we need to be cognizant of the demand and supply in the marketplace. I'm not sure about a permanent shift. However, to your point, what we've seen is over the last 4 quarters, at least 3 quarters, our attrition has been going down consistently, and we believe that in the immediate future it'll continue to be down. Our ability to attract talent, both from campus as well as talent with experience across the globe, has gone up substantially. And there are 2 reasons. A, to your point, I think generally there is a little bit of a slowdown in the market, perceived slowdown, or in some cases it's also real. And I think the way potential employees look at KPIT has also changed. So the perception of KPIT in the last couple of years has changed. That has worked in our favor to sort of attract the right kind of people. And as you said, talent is talent at the end of the day. Yeah, we always have to remain competitive. One is the pay part, where we'll always be competitive. I think we have to take an inside-out view, and we also have to take an outside-in view when we look at compensation. But the second part, we believe, especially as you go with people more than 4 or 5 years of experience, it's not just about the pay. I think when we speak to our people, we understand people are more passionate about our company given our commitment to sustainability. We are trying to truly live our vision of making this world safer, cleaner, and smarter. And that's something holds them back and keeps them excited. And with the fact that we are also doing cutting edge work with some of the best OEMs across the globe. So it's a combination of these three factors. And our initiative, which is Best Place to Grow, is actually anchored by these three things, competitive compensation, commitment to sustainability, and providing incredible opportunities for our people to make a difference for our clients.
Yeah, absolutely. And good luck with that, Sachin. Thanks so much for joining in today and highlighting what the quarter gone by has been and what is business going to look like going forward. 4.5% up on KPIT Tech as we speak right now. Quick break. When we come